want to start with the picture of kind of credit health in Canada, because we know that TD, like other banks, set aside a big kind of rainy day fund out of concerns for what would happen to some of your loans. They didn't go bad. Were you surprised by that? Was that overly conservative, or does that speak to something else, the form of government support that we've seen here in Canada?
No, listen, last year when we built this, what we call reserves for performing loans, it was entirely appropriate, given the uncertain nature of this crisis, what could have happened to the economy. And frankly, we wanted to make sure that we are adequately provided for. And what you've seen now is, some of those losses have not panned out. That doesn't mean we are out of the crisis, but the way, the accounting rules work on IFRS 9 and other sort of components of accounting, it's important that, we continue to look at the reserve levels we have and follow the rules. And that's what we've seen here. So, yes, I think the reopening of the economy, what's going on with the vaccines, all that have been positive, and hopefully it sustains itself. If it does, then it'd be great for the economy. And what is good for the economy is good for TD.
And on that front, I mean, we've seen a little bit of a hiccup in vaccine delivery in this country. Does that change at all your expectations for how and when our economy gets back to normal?
Well, we're seeing, obviously, we are much better off today than we were 90 days ago, and, vaccines were still in people's dreams, and we were thinking, are we going to have them or not? So now we've got a few vaccines that have been approved and they're being rolled out, and yes, it's been clunky. But from my perspective, these things will get sorted out. I think, we're seeing great rollout in the U.S. within our footprint. We've seen good activity with respect to the vaccines. In Canada, we've started to see more of it. And I think we are seeing that in our numbers as well. So I think it's a good thing to have vaccines. It's a sure way out of this pandemic, and certainly would be good for the economy. And so that's how we are looking at it.
And yet we will have a period almost certainly where the U.S. is close to or fully vaccinated and Canada is not even close. What do you think that might do to the Canadian economy? Obviously, a strong U.S. economy tends to be good for us. In this case, though, we will remain shuttered in some ways. How much of a drag will this be?
It's hard to say. I mean, there is some talk now that Canada, might catch up in the next few weeks with all these new vaccines getting approved and the deliveries becoming, more certain. So it's hard to predict exactly. Amanda, yes, there could be a slight drag or delay, but my hope and expectation is that you will see strength in the U.S. without a doubt. It's an economy that is reopening faster. And Canada is following, but hopefully, from a North American perspective, we should start to see the other side of this pandemic. And I think that's a welcome to all of us.
As we do reopen here, we will see obviously some scarring from businesses that have been hurt badly. We will see some entrepreneurs taking this opportunity to start businesses. What's the bank's plan to make sure that your lending practices are generous, that your risk profile is such that you'll be able to support businesses that want to keep going or get going?
Well, right through this pandemic, I feel great about, the banks generally and TD in particular. We've stood by all our clients. We've stood by, the communities in which we live and work. We provided credit. We've been there, to make sure that the economy takes hold the way it should be. And the role of the banks is critically important. So, yes, this pandemic is one for the ages. It's done tremendous amount of damage, particularly to the small business sector. And, as we come out of it, we at TD, we've got terrific capital levels. We are there to support our clients. In fact, we are growing our loan books. So we will make sure that we do our part that you would expect us to in ensuring that, that the credit is made available where appropriate.
We also do expect to see some changes, even if they're slight, in an increase in mortgage rates in the months ahead. It seems to be the expectation everywhere. What's your thought about how that's going to play into your business? It was a source of strength for you in the most recent quarter. It has been one. Are you worried about an overheating of the housing market in this country and the relative level of household indebtedness?
Well, as a banker, we get paid to worry, so we always think of different scenarios. But I think, sometimes, yes, lower interest rates have really helped, the mortgage business. I know that's a key component. But let's not forget that particularly in major metropolitan areas in Canada, there is a huge supply issue as well. And that I don't think is going to go away anytime soon. So it's again, it's a cyclical business. You will see, certain parts where maybe there's some softness in real estate prices. But I think over the long term, given the supply issues in major metropolitan areas, I expect, that this will be a source of strength, for our mortgage business.
What is the biggest weakness you see for the Canadian economy?
He said, I think the way we need to think about this, and I know governments are already responding, part one is, can we make sure that if this thing were to ever happen again, the key industries that need to be more in Canada, like, production of vaccines, manufacturing of vaccines, perhaps the PPE, that we've been talking about. So that's got to be a top priority, and I know government's already looking at it. You saw the announcement from the federal government. The second part I think we need to think about from a Canadian perspective is if you look at the level of deposits, in banks, there's a huge amount of pent-up savings that is sitting there that will be spent. Once we are out of the pandemic, these monies are going to be spent. So could we think of policies where these monies do get spent in Canada, that folks don't, rush to all over the world and spend money elsewhere? So I think that's got to be, part of the equation. And I think some of the models you've seen out of places like Singapore, where they do promote, local sort of use of the funding that's available. So I think that's an important consideration going forward. Mm-hmm. And then finally, of course, there are certain industries that are going to do very well coming out of the pandemic. The technology companies, digitization, climate change, and it's a huge issue. At TD, we announced a climate action plan, net zero by 2050. But what that means is that there's going to be a large requirement for what you call industries that thrive in that world, in the low carbon economy. So I think as a country, we'll need to think about how do we promote that? How do we promote to make sure that a lot of these, newer industries that are going to be in sync or in alignment with climate change going forward are based out of Canada. So there's lots to do. I'm sure all the public policy makers, are thinking hard as to how do they make Canada the destination. But overall, I feel good about Canada. We've got it's a developed nation. We've got the biggest economy as our neighbor. We are a well-educated country, and we do adapt to newer realities. So I feel confident that, as we get out of this pandemic, there will be a strong recovery, and hopefully, we have certain policies that would promote this long-term growth for the country.
Did the pandemic really change your strategic thinking on the brick and mortar branch? You're closing a number of U.S. branches as digitization takes hold, and you and other banks had really defended your brick and mortar footprint in recent years. Has that changed?
No, in fact, I'd say, but let me address the brick and mortar issue first, and then talk about the U.S. We always believed in the omni-channel experience, where every location, every digital property we have, ATMs, phone centers, play an integral role in how we provide those personalized, connected, legendary experiences to our customers. And frankly, even through the pandemic, we saw the role of our branches and stores was very important. Our customers made, online appointments, digital appointments. They wanted to deal personally, in many cases, with a TD banker. So it just reinforced in our minds as to, our model of what we call the omni-channel model. So I don't think that changes. Of course, we've seen certain trends. Digitization has gone up, exponentially. We got more than 1 million enrollments, in a short period of time on TD properties. And so, of course, what we do in those physical locations may change over time. It'd be more advice-based rather than purely transactions. So that's how we are seeing this. And frankly, our own experience has shown that is what our customers want. And, we will do what is right for our customers.